090, and this video I will explain about the supply chain finance. What is supply chain finance and how supply chain finance is working, and why benefit supply chain finance for sellers and buyers. What is supply chain finance? Supply chain finance is a term describing a set of technology-based solutions that aim to lower financing costs and improve business efficiency for buyers and sellers linked in a sales transaction. Supply chain finance methodologies work by automating transaction and tracking invoice approval settlement process from initiation to completion. Under this paradigm, buyers agree to approve their suppliers' invoice for financing by a bank or other outside financier, often referred to as factor, and by providing short-term credit that optimizes working capital and provides liquidity to both parties. Supply chain finance offers distinct advantage to all participants. While suppliers gain quicker access to money they are owed, buyers get more time to pay off their balance. On either side of the equation, the parties can use the cash on hand for all projects to keep their respective operations running smoothly. 2. How supply chain finance works. In simple terms, this funding works because business owners or suppliers sell invoice to banks or other financial institutions as supply chain financing providers. The invoice was purchased at a discounted price. Thus, buyer as product user can still get this product. However, it has a longer time frame or maturity to complete the payment. Example: let's say the buyer, company Sakti, purchased goods from the seller's supplier 3. Under traditional circumstances, supplier 3 ships the goods. They submit an invoice to company Sakti, which approves the payment on standard credit terms of 30 days. But if supplier 3 is in their need of cash, it may request immediate payment at a discount from company Sakti affiliated financial institution. If this is granted, that financial institution issue payment to supplier 3, and in turn extend the payment period for company Sakti for an additional further 30 days for a total credit term of 60 days rather than the 30 days mandated by supplier 3. What benefit for buyer? Keeping cash flow. Through SCF, buyers have a longer period of time in making payment for the product purchased. Thus, this party is not burdened by invoice from supplier, so that cash flow is healthier. 2. Business capital remains safe. Supply chain finance allows buyers to receive money from sales from customer first before finally paying off stock. Thus, this will not interfere with working capital for business activities. 3. Increased sales. This financing allows the buyer to obtain sufficient stock of goods from supplier, that way they can still carry out sales activities smoothly, so that the number sales has a potential to increase. And what benefit for supplier? Ease of access to capital thanks to supply chain finance. Suppliers can still get funds for working capital from lenders or financial institutions that provide supply chain finance. This keeps the activities the company running well. 2. Improving cash flow. The company cash flow will certainly be healthier of obtains fresh funds, so business owners don't need to worry about the continuity of their business and can steal product of goods.